If you know how to go through this process of understanding a market in general, realistically, you could go anywhere.
If you have a deeper understanding of a market that, big competitors, they just quickly look at the data and move on. If you're able to see something that other people's miss, that's where the real opportunity is in storage, is to be able to identify that nuance that not everyone's going to see.
But just understand that as you go through these things, all you need to do is go step by step. Hey, I need to call the city today and see if there's any additional supply coming on the market. Check this box. Like just moving down the to-do list, take it piece by piece, chunk by chunk. It is a process, but it's absolutely doable. All right, everybody, we have a killer self-storage income episode going on today. George, we're talking all things finding deals, making deals, looking at markets, everything, just high-level view, really breaking this down, simplifying it, and start to finish, from finding markets to finding opportunities, looking at facilities, how to go about some of these things. I'm excited for this one, man.
Yeah, no, I think today was really good for people who are just getting started. We say this later in the episode that finding deals is the lifeblood of your business. And so if you don't have deal flow, you don't have a storage business. And this is really, the things that we dive in today is key to being able to not only break into the industry, but really start to scale it and create the investment that you want out of this. So super excited to dive into today, and let's get to it.
And really, like this is it. This is the bread and butter of getting in, getting started, getting a facility under your belt, and being able to do more of it. So I don't know, you hear all this stuff, right? You hear that the market's difficult, that sellers are asking too much for their stuff, or that interest rates are crazy. Like you always hear these things from like a high level or macroeconomic level, where I think it's really important to kick things off and really preface the importance of understanding that, yes, there are some national metrics that you should be looking at and some different macroeconomic things that are smart to pay attention to. But just understand and realize the value of self-storage being that hyper-localized asset class, and you need to focus on what those markets look like. And so we're going to kick the podcast off by talking finding markets.
Love it. And I think too, like what you're saying, Connor, is like we're always paying attention to like what's going on in the economy and in the market. Like that stuff does have an impact, but it always changes. No matter which way interest rates go or other aspects of the economy goes, it creates opportunities and challenges. And that's, even if interest rates are incredibly low, it brings way more buyers into the space. So you have a lot more people just making, over asking price offers. There's a way different situation in 2021 making offers on facilities at that point compared to today. So we don't really look at it in the sense of our time's good or bad. It's like, what are the challenges and opportunities right now?
Yeah.
Just a different mindset shift.
Yeah, no, that's a great way to put it, man, because there's always going to be reasons not to do the deal or to pursue storage or anything else. It's like you could come up with any number of excuses as to why right now is just not a good time.
Yeah.
There's always ways to figure out how to bridge those gaps. And dude, yeah, sometimes it makes sense and sometimes the deal doesn't make sense and you just move on to the next one.
Before we dive into, I didn't even think of talking about this, but what you just said made me think of it. There's a article from CNBC that came out in the past couple of months talking about how self-storage acts differently than the rest of the economy. I'll find that for the link in the show notes, but it's a great read to hear. Like, you're not just hearing it from self-storage income on this. Like it's from a major business publication talking about how storage is very different than how the rest of the economy operates. And the main reason being is because consumers use storage even during downturns. So it's a whole different way that people look at self-storage and how it's used compared to the housing market. And so anyway, I'll grab that for you guys, but it's a good read to be able to see as we dive into this finding deals, how that has an impact on a more macro level.
It is interesting to see that it just continues to be that asset class that has a lot of resistance to, again, whether it's interest rates or it's just larger macroeconomic things that are affecting everybody in their homes and affordability and all the different facets of their lives. And somehow, man, storage just keeps doing great in a lot of ways if it's done right. Yes, anything can go wrong. Storage is not foolproof. It has to be done right. Make sure that you're, surrounding yourself with people that know what the heck they're doing. You're educating yourself well, and obviously listening to self-storage income. But with that said, let's dive into finding a market. This is a really, really common question that we see a lot of times from folks starting out. They're like, man, I want to get into self-storage. I've heard all about this remote operation stuff. I want to run it remotely. I don't feel like I need to be there on site. They literally can go to any state in the country, any city, anywhere, and potentially buy a storage facility to own and operate. So the question is, like, where do I even start? Like, how do I choose what's going to be good or not? And that could really very well be like a point of analysis paralysis, I'm sure, for a lot of folks. And first and foremost, the recommendation there, if you're looking at getting into storage, whether you want to run it remotely or not, I personally, this is what I would do, is I would be looking at markets and areas that I was familiar with in some way, shape, or form.
Mhm.
If I had lived there or if I had family there that knew and I had some insight into what the growth was like there and the vibe and utilization, of even the storage in that area. Is it like a lot of recreational stuff? Is it a lot of like multi-level interior temperature control, all the different things? Or is it recreational vehicles? Is it traditional? That familiarity can play a huge role in your overall understanding of what's happening in that area. Where it's like, for me, it's very easy for me to say, yeah, Boise and the area around it is freaking wild. Like, it's grown like crazy. The traffic is insane. There's 30 square feet per capita, but demand is still freaking wild and crazy for self storage, whatever it is. Like, again, I'm throwing out random numbers here, but it's very easy for me to look and recognize certain elements in this area that would work well or wouldn't work well for self-storage, or even certain self-storage type, assets, where I'm like, yeah, no, if it's on the north side of town, I know for a fact that everybody that's leaving to go to the mountains for the weekend, they probably would want a facility that they could just swing in and grab the RV from. And so if it's, not in the middle of town, that would probably be better. Like, all these little granular details, those are just insights that I wouldn't have going and looking at some random town in Texas or something that I have never been or don't know anyone in.
Yeah, I agree with this 100%, especially if you're brand new to storage in the industry overall. What Connor's talking about really is like, how do you understand and analyze the market? And so when you just have a familiarity with a location, you can understand like, okay, what do the people do here for work? Like, what are the, the wealthy neighborhoods and the areas that may have a lower income and how they might utilize storage, or, and the developments that are coming in, whether it's storage or housing complex or whatever. I think what's important is like, that doesn't mean you have to buy a facility there. That doesn't mean that has to be where you look to buy self storage, but it's a really great way to understand what does this market look like from a self storage perspective, because then you can start to see the interweavings of it. Connor brought up a point of the north side of the city. The way you would look at a different business compared to storage, you're not necessarily looking at from like north side, south side, east, west, whatever, but storage is super localized. And so like the people who are using a storage facility in the northeast part of Boise may be having a totally different purpose than the people using in the southwest side of it. Also, too, you're heading towards the mountains. Like you have a strategic play for something like boat and RV if you're located en route to where people are going, as opposed to on the western outskirts, when how people have to go all the way out of town to get their RV and then go back through the city up that way. And so when you look at storage deals, you need to understand like this is a business. So you have operations, you have marketing, you need to acquire customers who are going to rent those units, and where are they going to come from? And so like the way the market operates is going to depend on that so much. And so like you can take an example of New York City and how they use self-storage compared to Midwest Kansas and how they use storage, and they're two totally different. You can make money in both, but you want to be able to understand how those people are utilizing storage. And then why this is important too is that once you start looking at finding deals, you might not necessarily get to decide like, this is the exact town I want to buy a storage facility in. If you're just looking at all market deals, there might be none available in that small town. So sometimes what's happening is it's actually flipped, where you find the deals and then you have to be able to go and be like, okay, well, is this a good market to invest in? And then that's where you take what Connor's talking about on your basis of, okay, I know these areas and how I can analyze a storage market. How does this, where this facility is located, compare to that?
hmm If you know what to look for and how to go through this process of understanding, a market in general, yeah, I mean, realistically, you could go anywhere where you're like, man, yeah, I really do just like Texas, like for whatever reason. Like if you really just wanted a facility somewhere, it's absolutely doable for sure. But you could look at this even from like a cultural standpoint too, where it's like not all of America is the same, even down to the weather. Prime example of this, like finding markets and going through these processes, is when we first started getting into owning and operating facilities in the Midwest. We were hanging out normal day. We get a call from one of our employees in the Midwest. They're like, "Hey, yeah, like tornado warnings going off. Like, do we stay at work or like what do you guys want us to do?" And we're just like, "I don't know. Like, what do we do with this scenario? Like, I've never dealt with tornadoes before." Like, I say this jokingly, but that is actually like that's a very big deal. You've got employees, you've got assets, you've got people to direct, and dude, you better figure it out fast. Like, what are the requirements? Like, are there shelters around? Or is like you're talking people and their safety and their lives? Like, it's a big deal. So, really, really important to just know and understand these markets, the cultures within them, the growth, or even the downsides, and again, how people are utilizing and traveling and everything.
Hey, podcast listeners. As you know, self-storage, we give away all our information for free. It's my open playbook, and I share with you guys every single week what we're seeing and what we're doing. But what a lot of people don't know is that we have even more resources available. So you may not know, but I wrote a book that's hard to even call this a book. I mean, this is a manual. We're talking 400 plus pages, which include all sorts of information about how we have been in the self-storage industry. That's everything from how we got our first deals, to scaling, to buying deals in today's market, what's changed and what remains the same. This is an up-to-date book that shows you how the market has changed and how you can win today. This isn't simple, this is how you buy a deal. No, this goes into everything, including how you scale and create a self-storage business. You can get a physical copy, an ebook, or the audiobook, plus free access to bonus content at the end of each chapter. You can get it today. It's available on Amazon and other platforms in which you can follow the link.
We're touching on some of this stuff, really, really high level, but taking it even more granular where you're like really wanting to confirm whether a market is good or not. And what are the metrics, right, that you need to be looking at to confirm, like, yes, this is a good market. It's checking the boxes. So to list out a few of these things, some obvious ones: population growth. We want to see some good, steady population growth. George, I don't know. What are you seeing? I know you're doing a bunch of underwriting. We've seen a bunch of information from members in self-storage income and so on and so forth, and feasibility studies we've done. But what do you typically like to see population growth-wise when you're like feasibility study or underwriting or doing any of that?
It's always going to depend. Seeing positive growth alone is good. I love being able to see something that's like closer to like a 0.5%, or if you can get into the 1, 2, 3%, then that's really good to see. And then you also want to be able to see, like, did it grow in the past year, but what does it look like since the last census? Like, how is it trailing?
Yeah.
The other thing I'll say too is these numbers can be misleading. We try not to obsess over any one metric. I say this a lot, and the reason for that is because you might see a declining population, especially when you go into storage and you're not just looking at a city, but you're looking at like the 5-minute drive time, 10-minute drive time, 1 mile radius, whatever that is. Like, you could be in an area where the storage facility is just surrounded by businesses. And so there's no growth happening, or maybe negative growth, but there's no people living there in that 5-mile radius. And so that's going to not give you the full story of what's going on there. So yes, we like to see growth, but if you don't see population growth, that doesn't necessarily mean like immediately run away from this market.
Yeah. No, you see that a lot of too in some of those like vacation towns, recreational towns and stuff where
Yeah.
population just seems kind of stagnant or even negative or whatever. But again, that where it comes back to understanding the utilization of that area. Like what time of year are people coming in there? Do they need a place to winterize the boat and to store it over the colder months or whatever? So really, really important stuff. The next thing I kind of alluded to this in when I was talking about the Boise area growing and just expanding like crazy is like square feet per capita. This is one thing that I think a lot of us get caught up on. Great metric to know. Certainly, have an idea of what that looks like in the markets that you're considering. However, something that we will just continue to hammer on is that demand is king above all other things. It doesn't matter what the square foot per capita is. It only matters if there's a demand for storage. If people are utilizing self-storage in the ways that you intend to either build or own and operate storage. So don't let square feet per capita scare you away. Going back to your point, George, is like that, this like one metric to rule them all scenario where it's like, do not do that. Like literally don't do that in any facet of your business. When it comes to analyzing markets, analyzing your P&Ls, looking at operations, any of those things, like you need to be looking at several different pieces of data to make the most informed and educated decisions. I mean, that could be your marketing stuff, it could be anything, but like make sure you're looking at all the different metrics. But if I was going to say that there was like a king of metrics when it comes to finding markets, analyzing markets and the health of them, that demand is one of the top.
Yeah, I agree for sure, because even if you have a declining population and the square foot per capita is high, but all of the competition in the area is full, everyone's renting storage, like that's a sign that people there are utilizing that asset. And so I agree with you completely there, Connor. I think that demand is always the key piece to be able to decide, like, can I increase rates? Can I implement my value add strategy? Are these people using storage? Like that's really the key one to it. Square foot per capita, it's important in general, but being able to see, like, okay, what is the supply of self storage in this market right now, and then is there any incoming developments coming in? Because that's the key thing that can screw your demand, is if you have, everyone's full, but then you have a massive facility that's going to double the supply in the area. So that's where we're really paying attention to that square foot per capita. Is there a lot of development coming in, because that changes the fundamentals of that market.
Mm-hmm. And for anybody that doesn't know, you can go and talk to the local cities, counties, all of that, and figure out what's been approved, permitted, what's been submitted for approval,
Yeah.
all those things, and you can get that information there. You just go connect with the city, connect with the county, whatever that governing agency is there that's managing the developments and approval processes, and they can help provide you that information. So something else that is another huge indicator that I like to see is the diverse economic drivers. One of the reasons being, you don't want to have a boomtown scenario. You might find out that there's low square feet per capita, there's a ton of freaking demand, but it's only there because somebody struck oil and in the next 3 to 5 years it's going to be on, or whatever it is. Really, really
Yeah.
important that you've got diverse economic drivers, meaning that you have multiple layers of employers and infrastructure there that are going to help keep people employed, help people be able to pay for their homes, pay for storage, pay for living, all those different things. So it's great to see stuff like universities and hospitals and schools and large employers, whether it's a manufacturing plant or it's a food processing plant or it's some kind of research and development firm or developments, like whatever it is, it's great to see those diverse employers and diverse economic drivers there, where you're not just relying on one section or one area or one industry. Because I mean, man, we've seen how volatile any industry can be throughout the history of the United States, where some random thing happens somewhere and then suddenly demand collapses overnight or an entire industry literally vanishes. And so really important just to have that diversity in the economy there in those local areas.
Just another example. So I live in the Northeast in the coast of Maine, and we're a very big tourist area. And so right now we're just coming out of the edge of winter, but so it's very slow here. But in the summer it's booming, and that a lot of people use storage, whether it's businesses having extra inventory when they slow down throughout the year, or snowbirds who are gone for the winter but they want to store their stuff somewhere. And so it's like, okay, like tourism is a big part of how money is made in our area. And so that's how storage has found its niche into it from a consumer standpoint. So like to what Connor's saying, it's just an interesting thought practice when you're looking at markets to be like, how do the people here make money? How do the businesses succeed? And then how does storage weave into that?
And the thing too is like all of these things that we talk about in an hour or 45 minutes on a podcast, it sounds like, and it is a lot of things to go through and to look at, but just understand that as you go through these things, all you need to do is go step by step. You just go and you're like,
Yeah.
okay, check this box. Hey, I need to call the city today and see if there's any additional supply coming on the market. Oh, cool. Like call the city, like just moving down the to-do list, take it piece by piece, chunk by chunk, and just understand that it is a process, but it's absolutely doable. Don't listen to the podcast and be like throwing your hands up. No, I can't do all that. Like, that's freaking so much work and so many things. And yes, it's work, but just
Yeah.
step by step, guys. Like don't get too
It's
overwhelmed.
true. It gets a lot easier. It's overwhelming at first, like looking at a market, you're like, oh my gosh, like I don't know. There's like 100 zip codes in this area. How am I supposed to look at this? But like it does get easier, and it's just one of those things. Same with analyzing deals. Like you just get your reps in. If this is your first podcast, like my hope is that you guys are excited about this, because it's like, hey, I can do this and I can learn more. Like you really just need Google, and you can find out a lot of this information, and then you pick up the phone and call somebody. But yeah, to your point, Connor, like don't expect that you're going to listen to this 45-minute podcast and just be like, I know how to analyze markets 100% right now. And that's, it's okay if you don't, but you will get it through your reps.
100%, man. No, it's good stuff. And then the other thing too, man, the amazing thing that we have nowadays, and this just it seems to get better and better, like by the day, it seems like, is the technology behind being able to analyze markets, look at storage, contact storage owners, connect with anybody. And one of those things that we like to utilize is Tract IQ.
Yeah.
It's a fantastic tool. You can go in, analyze markets, pick certain trade areas to analyze and look at, select all kinds of different metrics. I mean, it's like, and they just continue to improve it. Again, like by the day, it seems like, where there's new functionality and different things that allows you to go in and look at all these things. We'll put a link in the show notes for you guys too. Like just total shameless plug here for Tract IQ and the amount of value that it could bring to you guys in streamlining, looking and analyzing these markets.
Noah, the CEO of Tract IQ, he's been on the podcast before. He is a storage investor first, who then saw an opportunity to create better data for the industry. And so, because really, like what Tract IQ is, it saves you time, as opposed to having to go and find all of these places manually. Like square foot per capita, you literally have to measure the square footage of every facility. It's super time consuming.
Yeah.
You can do it. You can do it with just Google, but you can save a lot of time on Tract IQ. We actually too, part of our inner circle for self-storage income, we've included Tract IQ for free now, because it's just so part of what we do on a daily basis, that it's just now just part of the inner circle. But yeah, those tools, it's really every industry. Self-storage isn't unique in that way, but software and technology just allows you to move faster. And so, Tract IQ has been a key part of how we're analyzing markets to then find deals. It's not a requirement to be able to do this, but it can, if you're trying to save on time, it's worth the investment.
Yeah. No, I know that'd be me, dude. I'm like, all right, I've got kids, I got family, I got all these things going on. Like, I need things streamlined, man. So no, that's good stuff. So let's say you've gone through this process. You've identified, you're like, hey, I'm familiar with this area. I know the utilization. I've found some target markets I want to look at. What you need to do is start identifying facilities in those markets. And there's a number of ways to do this. I know George was just talking about Google. You can literally go and search Google. And I actually recommend this, no matter if you're utilizing technology or if you're talking with brokers and other storage owners in that area, whatever it might be, get eyes on Google, and don't just rely on like the Google listings either. Like literally pull up the town, look at it from satellite, and you very well might find facilities there that are not on Google. Like I still see this to this day. And those can be phenomenal opportunities that might be off market deals. That's another thing to consider. You don't just have to try to find facilities that are for sale in these markets. If you're like, man, I really like this area, but nothing's for sale, like I can't buy anything, don't just stop. Like go and talk to brokers in that area, connect with self-storage owners in that area, even connect with the managers or the management companies that are running those facilities. Like get your foot in the door and start having those conversations and understanding that market. Like don't just write them off immediately if you don't see anything for sale, because if you're seeing that, it just means it's not for sale today. It doesn't mean it's not going to be for sale tomorrow or in the very near future or even 5 years from now, when you have all the experience in the world running all these other facilities you bought and this one opportunity finally comes up. So next steps after you're finding those markets would be diving into and identifying facilities in that market. A lot of different things that we can talk about and just identifying facilities. Like, what do you think? You want to touch on some of this stuff here, George?
Yeah, for sure. I think like you're looking at your market first and being like, okay, what types of areas, what locations do I want to invest in? This goes back to the beginning of this call of Connor saying like starting with what you're familiar with, whether it's where you live, places that you've lived in the past, maybe places that you like to vacation. We see a lot of people look for like, hey, I live somewhere that has rough winters and I want to be able to find facilities in the Southeast. People are just moving to the Southeast in general. So that, we see people looking to invest there as well too. But then it's, going and saying, okay, what are all the facilities in this market? And then what facilities fit my buy box or my buying criteria? And then you start to narrow that down. And we have whole other podcasts where we dive deeper into, building your buy box. So I won't go into all of that here. But you're building those facilities, and then this is where storage is a long-term game. Like you're trying to build these relationships with these owners who maybe they've owned them for 10, 20, 30 years, and they don't have a clear person they're going to hand this off to when they're ready to retire. Connor's talking about, driving for dollars virtually using Google Earth to
Yeah.
go and look for these facilities where they're just storage or just rectangular buildings. They're pretty easy to spot out. And if you're able to see a facility that's not listed on Google, it's a good indicator that they probably aren't using up-to-date marketing practices. Like you'd think today, getting on listed on Google's bare minimum for online marketing at this point. That's an opportunity to build that relationship. And like Connor was saying, it might not be for sale today. Every owner has a price that they would sell their facility to you. If you offer them $10 million, they're gonna be like, yeah, I'll sell, even if they've never thought they'd sell before. Obviously, that doesn't make sense to buy at that point, but it's a thought concept to have of like every facility is for sale at a certain price. And can you underwrite this deal at a price that makes sense to you and then that the owner would sell to you at? And so that's the off market side. The on market's kind of the opposite, where it's like, okay, you go onto Crexy or you're on a broker website and they show you their listings for sale. So like you can see these facilities for sale. And then you have to go backwards and be like, okay, well, let's look at this market. Is this a market that I would want to be in? Because sometimes you can see a facility that it's like the aspects of the property look great. It's a good purchase price, but you're like, I would never want to be in this market. When you look at the on market deals, the beauty is that it's like, hey, they're right in front of you. They're for sale, but they might not be. If you're super specific, like I want to invest in this area, you may have to be patient for when those facilities hit the market.
And talking facilities and identifying these facilities, like first things first, go through, start identifying the facilities in that area. And if you find a facility for whatever reason that you're like, man, I really like this thing. Like maybe it's set up in a way that you really like, or the utilization is something that you enjoy. Identify some of the like competitors in that market. Make sure you're going out, you're listing what those like competitors look like that have the similar look and feel, they have the similar product offerings as far as units go, amenities, all those different things, and start kind of mapping out what those competitors look like in that market outside of just understanding all the competitors, which obviously you want to do, but make sure that you just have like competitors in its own little world. And that's going to help you through your underwriting. It's going to help you through your business plan and the development of all those things. Really, really important to know exactly who those competitors are that most closely align with what your facility or your target facility is.
Yeah, it's really everything to your business strategy there, because if you take a market that has 10 facilities and your facility is drive up storage with no gate, no fence, and gravel drive aisles, you're not going to compare that facility to a 3-story climate control building with a 24/7 surveillance system and, automatic gates. Like it's a two totally different facilities, two totally different customers are going to utilize that. And so with your dirt gravel facility, you're going to compare other like facilities.
Mm-hmm.
And then the goal of this is like, okay, I'm looking at this from a value add perspective. Who are the other facilities in my area? And then what are they charging for their rates? And is there a spread there? And that's where you tie that into your underwriting of like, what's this facility like today? What can I get this to? And then, at what price can I acquire this at so where I can get a return on my investment? Like ultimately this comes down to choosing to put your money somewhere to make more money. And so that's the whole strategy in a nutshell is, can I take this from point A to point B at a place where it financially makes sense to invest in this? And that's knowing your competition is important, because what we're not saying is, hey, go buy this facility and it's just going to be worth more money tomorrow because it's real estate and that's what happens. Like we're coming from this from business first for executing on a business plan to take it to somewhere better than where it was.
And something that came to mind as you were talking about those things is this is kind of another example of why square feet per capita or some of these might be misleading metrics just on their own. Is you might find, talking about like competitors and the utilization of these facilities, yeah, the market might be 20 square feet per capita and you've got all this new supply coming online, but you find out that there's a fraction of a percentage of that that's, boat and RV, let's say.
Yeah.
And this one that you're looking at is boat and RV, and you've got expansion potential. And like the utilization is totally different. So you might find these really amazing little gaps in these markets that you're looking at, where the overall market might be heavy in traditional storage or climate control or whatever it might be, but like really underserved in a totally different area within self-storage. And that can be a huge, huge amount of value for you to go in and execute on and capitalize on.
Examples like that too are sometimes the data and software misses those things. So
Mhm.
if you have a deeper understanding of a market that, big competitors, they just quickly look at the data and move on. If you're able to see something that other people's miss, like that's where the real opportunity is in storage, is to be able to identify that, nuance that not everyone's going to see.
Exactly, exactly. And so like full circle here, if it was me, I was going out there right now today, I found some target markets and I wanted to start going through and identifying some target facilities. What I would be doing, I would be making my list, identifying some target facilities. I would also be getting connected with brokers in that area, commercial brokers. I would also connect with business brokers. And I feel like this is something that people overlook every now and then, because people always think of self-storage as a real estate asset, which real estate is a massive portion of it and makes all the sense in the world. But business brokers can and do sometimes get these listings and connect with owners and have those connections with owners. So connect with business brokers in those areas as well. I would be connecting with state or local self-storage associations. I would be going to any of the events that they've got going on there locally, getting to, put faces to names, shake hands, meet other self-storage owners in that area, asking them questions, like building the relationship, like genuinely working to understand, the self-storage business and those markets that those facilities are in that they have, talking about what my plans are. Like, hey, I'm looking to invest in some self-storage. I've done this, and this in my past, or I'm looking to exit and do this other stuff over here. And I'm coming into storage and here's my plans. And like just talk to people about your story, build those relationships, share with them what your goals and objectives look like, and utilize those events and those people as a means to help educate and curate opportunity for you in the self-storage world. That's what I would be doing. I'd also be connecting or trying to connect with the owners themselves directly. This is something that I think people overlook every now and then as well, and they don't realize that they can literally just go. And in a lot of cases, especially the mom and pops, they're the ones running these things. You can literally just go and talk to them.
Yeah. First off, I thought the business brokers are great. Just, it's easy to go look for real estate brokerages or even self-storage brokers at this point. But yeah, the business brokers, that's a good tip, because that could, you never know how a storage facility could end up on one of their listings and everyone's overlooking that. So that's a great way to, just add another piece to your pipeline for finding deals. And then, talking to owners, we've had Ben on our podcast recently where he talked about how he would just go out to lunch and offer to go out to lunch with owners. Like, don't underestimate just the one-on-one conversation. I think we obsess over scale today, of just like, how do I scale this? How do I send out 1,000 emails or 1,000 calls and all of that? But it really just takes one facility that can really change the trajectory of your investment path. And so don't underestimate what, having one good conversation can do for you, as opposed to just like, how do I get out 100 cold calls today, or whatever that is. So I think that more than ever, in our AI, and like, I love AI, I love technology, but I think a lot of people are yearning for that face-to-face conversation. Don't underestimate what that can do for, acquiring a deal.
Totally agree, man. In a lot of cases, these people have been hammered with the phone calls and with the mailers and with all these things. Not to say that those things don't work. Like, you might have a very, very good dialed in process that works well for you to kick up good and qualified leads on potential acquisitions. That's great. But yeah, I to this day, man, do not discount at all the shaking hands, putting faces to names, getting in front of people, that stuff goes so far. And if that's stuff that you can do, that makes sense for you, like getting out there and doing that on potential deals that really make a lot of sense to you, that you're really excited about, that there's a lot of potential with. I couldn't agree more with what you said there, George. That's really, really good advice, and I could not stress the importance enough of like getting to know people face to face, building those relationships like that. It's huge.
Yeah. And I think too, like a lot of the balance of this is, like we'll still use mailers, we'll still call, and that's a great way to make that first point of contact. Like how do I get in touch with this person? But if you really feel like there's an opportunity on a deal, don't just let someone who's not answering your call be a deterrent. If you're like, no, I know that there's opportunity here, that's when it's like, we even see brokers do this. Like we have a great relationship with Franklin Street, and they came to our event in Oregon. And I remember Dave on their team was telling me that he had been having a conversation with an owner, and it was out in the Northwest, and he had no interest. He's like, I don't want to talk to you. I'm not interested in dealing with this. And then Dave's like, hey, I'm going to be out in the area this time of year. I'd love to take you out to lunch. Totally shifted the narrative, and they ended up meeting up. And so like that just goes to show, like, if you're going to put in the extra steps, if you're serious about making self-storage part of your your wealth vehicle, taking those extra steps will go a long way. So yeah, we're not saying don't utilize technology. It's obviously great, but think more as a all-encompassing package here, as opposed to just get rich quick. That's not what we're trying to emphasize here.
100%, man. All right, guys. So now, like, we've identified markets, we've identified some target facilities, we've talked a little bit about some of the processes there. Now let's dive a little bit into the actual execution here on the actual acquisition. What are some of these main things that we want to understand? We've got some bullet points here. A few things for you guys: the underwriting, what the acquisition process actually looks like for you as a buyer and for them as a seller. And we can, dissect some of this here momentarily. The due diligence process, what that looks like for you, what that looks like again for the seller. Like, what does that process look like? And the operations side of it. Once you close, you're running it. How are you doing that? Like, what infrastructure are you going to need? How are you going to run and manage and operate and own this asset once all of this stuff is done? Because finding the deal, getting the deal done, doing all this stuff, I mean, it's the tip of the iceberg, guys. Like, it's just the beginning. Now you have an incredible asset under your belt, and it's time to go out there and execute and own and operate an amazing business.
Yeah, for sure. And even like you just went through 4 bullet points, and like we've done whole podcasts on each bullet point. So, like
Yeah.
we're not gonna be able to cover like everything about underwriting or all about due diligence today. But I think the point is that, especially like, with the content that we try to put out with self-storage income, we're so focused on management and operations. And it would be easy for a beginner to think like, well, why do I care about that? I don't own a facility. I'll figure that out when I own it. But what's important to understand is that how you run the facility ties into how you analyze the deal to do your underwriting, which then ties into the deals that you find. So it's really important to begin with the end in mind, to be like, okay, what is my actual plan for this? Remember, like this isn't about self-storage. It is, how do I get a return on my time and investment? Like that's the goal of this. And the operations is so important to that, because if you're going to use remote management or third party, or if you're going to self-manage in some way, like that ties into how you underwrite your deal. And then same thing like Connor was talking about earlier, knowing your competition allows you to know, like, how much spread do I have for this? The biggest thing I can say without trying to go too deep into every single topic is that we're very checklist oriented. Like Connor does a great job of having a massive due diligence checklist for here's what it looks like from having your offer accepted to closing date. And I feel like that spreadsheet just keeps growing with new things that we add on, and every deal is a little different. So I know one of them has like a golf cart line on there. Like not every facility is going to have that, but
Yeah.
I'm sure Connor taking over a bigger cedar facility was like, oh crap, this one has a golf cart. We got to be ready for that next time.
Or it doesn't. And the freaking things, dude, golf carts are ridiculous, man. I don't know who's selling those things out there or why they're so stinking expensive, but they suck, dude.
but anyway, like it's yeah, very checklist focused on your due diligence, to be able to know, like, okay, okay, you found a deal and you're underwritten it. Now what? Like you're gonna submit your offer. That's really the key moment. Until then, you're kind of just playing. Like you're just like, okay, I'm analyzing deals. I'm looking on Crexy and looking at facilities. But once you've submitted an offer, that's when you're really like, okay, this is real. Like I'm sending a formal letter or at least a number. Like here's what I would purchase this facility at. To show a level of commitment to the owner. And so that's really what we look at that. And then if they accept that offer, you're going into your purchase and sale agreement where you're now, now you're binded to do the deal. And that's when your due diligence begins. And that's where, all the fun starts, and all of a sudden you're just in a time warp where it just seems like an hour goes by and it's actually been like 2 days. Like time moves really fast there. And that's why we're very big on the checklist piece. All of that to say though is that if you don't have deal flow, you don't have a business. And so what's really important is to be able to find a way, whether it's, your off-market pipeline, your broker relationships, or really an all-encompassing way. But if you have a deal where all of a sudden it's taking up all your time and energy on that due diligence side, you still have opportunities coming into your inbox in some way, because that deal that you are working on could fall through. And if you have no pipeline for new deals coming in, you're going to just have to be starting from square one. And so it's really important that deal flow is really the lifeblood that allows you to turn yourself from like looking at self-storage to really building a self-storage business.
Some of the reasons why you really want to understand these processes going in, throughout the acquisition, start to finish, is so that you could potentially, in a lot of cases, especially again if it's mom and pop owned, is to help have these conversations with the seller or even with the broker in some cases. There's a lot of times where we have to sit there and have these conversations about a process, or why something is the way it is, or why we're offering the price that we are as far as the sale, or any number of different things. And it's best to be able to sit down and have those conversations and know and be able to have that communication back and forth to help coach and guide throughout the process there. Because it happens more often than I think people would expect, like going into it. You have this idea that, somebody's a business owner, they've got this asset, they've had it forever, they know what they're doing kind of thing. But yeah, they very well might know and understand a certain element of self-storage or running a business or certain things, right? But they might not understand business acquisition or transactions at all, and why you're going to have to spend 30 days doing your due diligence. Like, what do you mean? Like, the facility's great. Like, let's close today.
Here's my keys.
Yeah, exactly. Extreme example, but
Yeah.
just know that happens more often than not. So, like I like to tell folks, man, like I think it's so important that you guys are always building your network. That's why I can't continue to stress enough the face-to-face, going to events, going to meeting owners, going to the state and local associations, going to some of these national events, some of this stuff where you've got all these different owners and operators and vendors. And shoot, I mean, you could even call and talk to these folks. Like, let's say I was interested in running a facility remotely. Anybody right now could call Store Local or Tenant Inc. or any of these folks that run software for running storage facilities and ask, like, how are people using your tech? Like, give me a demo, walk me through all this stuff. Like, what does it look like? How do people utilize it? What's the most like trendy thing going on right now that's working in people's businesses that is, aligned with user expectations? And I mean, you could literally just go down all the rabbit holes in the world. And I just cannot tell folks enough. Get out and start building those networks, connect with banks, connect with lenders, connect with even potential. This is another one I always share with people as well. If there's people out there that you think might be a good fit for you, that could be like capital partners or a partner in your business in some way, maintain, massaging those relationships and keep those folks close at hand to where when you've got a facility or some kind of opportunity that might align with them and their goals and their expertise or capabilities, whatever, you can immediately connect with them and execute on that thing. I've been hammering on this a ton lately, but and I think I even said it on the last podcast maybe, but when an opportunity comes along, it's too late to prepare. In building those relationships consistently over time, like, you're preparing for when that lightning strikes, for when that opportunity comes along. I know I listed a bunch of folks, but I mean, we're talking everything from accounting to legal to all these different pieces that you're going to need to own and operate your business, insurance brokerage firms, all the different things. Like start building relationships now.
Yeah, no, I love that. I think that the network is really something that storage is relatively tight knit as an industry, and so which has a lot of great things about it. There's a lot of people who are willing to help, and that's what one of the things that we're really focused on with self storage income is obviously the education we want to be able to help and teach, but it's really helping bridging the gap to connecting with other people in this industry. And, like Connor's talking about, one of my favorite things that I've seen happen, whether it's in our community or at events, is people meet for the first time and then they end up, a few months or a year later partnering on their first deal together. Like that's one of the coolest things to see, where they're tackling something that they might not have been able to do on their own. We've seen that happen time and time again, where people get into the industry, start learning, come to an event, meet with people who they have connection with beyond just liking storage, that they start talking about family and goals and travel, and then all of a sudden like, hey, let's do this together. And then they're able to get a deal done. I think it's really one of the coolest parts about the industry, building those relationships before, like Connor's saying, like putting in the work so that way you're ready when the opportunity comes, is going to go a long way. And those are the things that we see. The people who are doing that proactively are the ones who are taking deals down.
Well, and going back to like all of the checklist things to do and how overwhelming this stuff can be, I'm telling you right now, it's a heck of a lot more overwhelming when you're like not only going through due diligence and trying to figure out if a deal makes sense or not and calculating all these things. Let's use insurance for an example. If I don't already have somebody that I can immediately call and connect with and say, hey, or send them an email, obviously, or whatever, and say, hey, I've got this facility here. Here's where it's at. Here's the deal. Like, what's insurance going to cost? If I can't just do that and I actually have to go and like find and vet several people, I just added like days of work on my plate to go and do that thing. So just like prime yourself, get those things in place. There's enough work to do already in due diligence. Don't shoot yourself in the foot by having all the more things to do. Is it doable? Absolutely. It's not impossible, but I like to work hard and to work smart at the same time. I don't like to make more work than what's necessary. So try to front load that stuff as much as you can and set yourself up for success that way. And something else that I'll share, man, is I'm kind of extreme in this opinion in how I view this, because you hear these terms a lot, that lead people to believe that people are on their own out there doing these things. You hear terms like self-made. I hear self-made, and like my immediate thought is like, no, like no one's
No
self-made
such
ever.
thing. No such thing. Yeah.
Exactly. Like no one is self-made, because whether you're hiring people, you're contracting people out, you're working with mentors, you're working with advisors, no one on the planet at the highest levels of success have ever just done it on their own. There's always been somebody there. There's always been the coaches, the guides, the resources, the employees, the team, the whatever it is. Like there is something there, and that's support from people, that's capital partners, that's employees, it's all the different elements there. So don't think as you're sitting there at midnight looking at your computer, staring at facilities, that like you just have like that's it. Like you're just on your own. There's no support there. There's a million different things that you can do out there. Again, connecting with people through networking, getting involved with events, getting involved with groups in the self-storage industry, all those different things. Make sure that you don't just try to do this on your own. Don't go it alone, man.
Well said. The other thing too is, don't assume that someone who has succeeded in storage or business did it all themselves. Like, and it also, just because you're not self-made doesn't take away from your accomplishments. If anything, I think it empowers them more, because it means you're able to work with others and lift them up as well too. So the idea of not being self-made is a good thing. You're able to not just benefit yourself, but the people around you. And so again, I always come back to like, as we're doing these podcasts, I always think of like, maybe this is someone coming here for the first time and you're like, hey, my accountant said storage is a good investment, so I'm going to go look up self-storage on Google, and you come across this podcast. Like the hope for this is that like you're able to see that these aren't just people who are getting into the industry and doing it all by themselves. They're they're learning, they're taking the next step, they're moving forward even though they don't know everything. They're totally overwhelmed with analyzing a market, and then they're just figuring out the next step and then meeting people along the way who are maybe 1, 2, 3 steps ahead of them. Not every piece of information that you has to learn has to be like, here is everything that you're going to do right now. Like, you guys aren't going to listen to this and remember all of it, and that's fine. But hopefully it's enough for you to go take the next step that you need to acquiring your first facility.
Yeah, fantastic stuff there, dude. And not knowing, like, you're not ever going to know everything on every deal. That's just not the nature of doing it. There's always going to be risks. You do everything you can to mitigate them, but you're not going to know every single piece of everything and be able to plan 100%. There's always going to be some unknowns and some risk and those things involved. But again, that's what those experts are for. That's what we're here for. All the things. So, man, with that said, incredible episode. Everybody, please leave us a review. Whatever platform you're listening on, even if it's just one word, like great, I don't care. Like, just leave us a review. It freaking helps out a ton. We love hearing it. If you want to leave us a long one with some feedback, whatever, always love hearing that stuff too. And man, George, appreciate you hanging out and doing some knowledge jump with me today.
Yeah, thanks, Connor. Appreciate it. And yeah, if you guys made it here, we're about an hour in. So if you nerded out this long, a review we would love it. So appreciate it, guys.
Heck yeah. Thanks everybody, and we will catch you on the next one.